Okay. Hello, Ali. Thank you for joining this conversation with us today. Is the co-founder and CEO of Crescent Crypto Asset Management,
Thank you for having me.
an asset management company that specializes and focus on cryptocurrencies. Ali, why don't you tell us what you do?
Sure. Crescent Crypto was born out of the need for passive index products in the cryptocurrency ecosystem. What we've seen is a plethora of active managers employing standard equity strategies, things like exchange arbitrage, momentum trading, algorithmic high frequency, the entire gamut of everything that's historically worked in the equities world. Someone is trying to replicate it in the cryptocurrency world, but there were no strong passive vehicles in the cryptocurrency space. It's a space my team and I had specific expertise in from our days at Goldman Sachs, and we thought to enter the space and dominate it. We are aware of the flight of AUM from active managers in the equities world to passive managers. We think it's only a matter of time between now and when we see that in the future, that same flight of capital from these active managers to strong passive vehicles like the one we've raised. Our first product is a large cap index of the largest, most liquid, most secure cryptocurrencies in the asset class. And we're doing quite well. We're raising a lot of money and seeing some great performance.
Okay. So when you're saying when you passive instruments or passive vehicles, how are you going about building that in the crypto environment?
Sure. We take our inspiration from the S&P 500. There are plenty of vehicles that track the S&P 500. Most notably, it's SPY, is the one most American investors are familiar with. So our vehicle is a market cap weighted index of the 20 largest cryptocurrencies in the ecosystem. And largest is not an accurate way or a full way to represent the index. We look for a series of 4 criteria. Number one, we want a cryptocurrency to have 500 million in market cap for an average of 90 trading days. What that does is it excludes a lot of riffraff. It excludes a lot of currencies that pop up real quick and fall back down. We wanted to maintain that 90-day market cap on average for 90 days. That $500 million market cap on average for 90 days. Second, we look at very specific liquidity profile. We want coins that are executing 30% of exchanging 30% of their coins on average over the course of 90 days. What that does is it allows us to hold coins that are liquid enough in a large fund like ourselves to be bought and sold without moving the market. We also don't want to see any of these coins having the majority of their execution or liquidity on one exchange. We like to see multiple exchanges so that we're never tied to one particular exchange. As you are familiar, these exchanges go down often. Their platforms are not capable of sustaining the increased demand. So we never want to be stuck having to execute on one exchange. The third criteria is no pegged currencies. So you might be familiar with coins like Tether and Zorum, pegged to the US dollar, pegged to gold. We see other coins coming up that are pegged to things like US equities. We will never hold a coin that is not free floating in price. We don't want these coins for multiple reasons. One, we don't want any macroeconomic risk outside of cryptocurrencies. There's enough risk in the cryptocurrency asset class, and that's what investors are paying us for. We're giving them exposure to the cryptocurrency risk, so no macro risk outside of that. And second, these coins are very easy to manipulate. It's the ones that are pegged to something become easy for those who issue it to either lie about what's really backing it or to increase supply or mess with the demand. And we don't want to risk having a coin that can be manipulated by things outside of market dynamics. So we'll exclude all those coins. And finally, and most importantly, our last criteria for a coin to enter our index is cold storage capabilities. We'll never hold a coin in our fund that we cannot generate the private keys and offline devices. We generate all our own private keys. We generate our own mnemonic seeds using of entropy and randomization. And if a coin does not have that capability, we won't hold it in our fund. When you apply those 4 criteria to over 2,000 cryptocurrencies. You come up with, at this moment in time, only 17 cryptocurrencies that meet our criteria. Those are the 17 that we hold in the fund right now.
Okay, so all ERC20 tokens are not included.
I'm sorry, can you say that again? Are not included or are included?
No, are not included. All ERC20 tokens?
No, they may be included. There's no reason why they can't be. They have to meet our market cap requirements. They have to meet our liquidity profile, and they have to meet the ability to not be pegged to any other asset class. ERC20 tokens are very easy to maintain in cold storage, so it's already built into the model.
Okay, perfect. And obviously, this is a passive strategy that could appeal to a lot of funds of funds, or maybe other. So basically, when you're today, you're doing capital introductions, right? You're raising money. So who are you talking to? In the institutional
family offices, high net worth individuals, registered investment advisors, people who have dynamic allocation policies that can afford to put their clients in 1 to 5% of their net worth in a cryptocurrency asset class. We appeal to those investors and those advisors who prefer passive strategies, who are comfortable with ETFs and don't like to pay the high fees associated with active management. Our fees are relatively cheap compared to other cryptocurrency funds. Most funds in the space are charging anywhere between 2 and 20 to 3 and 30. We've seen outliers in 0 and 30, 0 and 40 even. Our fund is relatively cheap in that we do 1 and 10. And that's been resonating with a lot of clients who don't want to outperform the market. They're just looking for exposure to the market. They want to make a bet on the entire asset class without having to choose which coins will be the ultimate winners. And our vehicle is perfect for that. We own the entire market. And the bet here is the asset class that's sitting at above $650 billion in market cap right now will increase in size. And this is a way to make that bet.
That's very interesting. And this is like just a stepping stone of your overall strategy of the fund. Basically, you're addressing needs of the market as they come. Is this where you're going?
Correct. Yeah, we want to offer a suite of passive vehicles. The first vehicle is the large cap vehicle. We're already entertaining some ideas and pulling the data to create a small cap index, call it a Russell 2000 cryptocurrency index, perhaps a mid cap index as well. We have some different flavors of those. And right now, our focus is on this large cap product. But in time, we think we'll offer other vehicles as well to meet the needs of the market, like you said.
Perfect. In terms of legal structure, you're set up where?
In the United States.
That's a very broad answer. But what I'm saying...
the fund itself is in Delaware.
What type of legal... Okay, the fund itself is in Delaware, so it's set up like a regular hedge fund?
Correct. Standard hedge fund with a general partner and unlimited partners that subscribe into the fund.
That's very interesting. And we see a lot of these funds these days, huh? A lot of guys starting things, trying to raise some money, etc. Sure, outlook on that. I mean, I come from this side of the. Basically, you are one of the most professional funds out there, right?
We appreciate it, and that's what we go for. That's part of our pitch. What we see often and what our competitors are doing is different from what we do. We see guys with deep technical backgrounds and heavy expertise on the protocols, but very few have the actual financial background and the Wall Street pedigree to be managing money at scale. And that's part of our appeal. That's part of why investors give us money. We have the experience to run a massive fund. And what we're doing is we're building a financial product. We're not introducing any manager bias. We're not trying to pick which currencies are going to be the best currencies. We're not trying to say we'll hold more Ethereum because we like it better than Bitcoin, or more Bitcoin because we like it better than Ripple. We don't do that. There's no bias. There's no variable associated with what my opinions and what my decisions will be, or any of my teammates. We have built a product that replicates the market. And it's a very financially sound, mathematical, systematic product that investors and sophisticated investors appreciate and can wrap their heads around.
Mm. My other question is in terms of execution.
Yep.
Basically, your strategy today has the assumption that can be executed. Now, in terms of operations, how do you see the execution coming along? Where are the burdens behind executions? What is the risk related to execution that an investor should know about?
Yeah, no, that's a great question. And part of our appeal is we understand market dynamics. We understand how capital markets work, specifically in the equities world. And one of our promises to our investors is we'll leave no dollar on the table. We look for best execution, whether it's on centralized exchanges or through over-the-counter exchanges. We'll execute where we see the most liquidity, where we see the best prices. We obviously prefer to pay as little in fees as possible, but are open to paying higher fees if we can perhaps execute a larger trade in a way where we can source liquidity from an over-the-counter exchange, as opposed to having to work orders for longer periods of time and take market risk on a centralized exchange. We obviously also are not big fans of the exchanges, so we will never leave any coins on the exchanges. And part of the operational burden that you were talking about is how do we maintain a large fund away from the exchanges? Being a passive fund, we have a relatively large advantage over the active managers. The active managers have to keep their coins by definition on the exchanges or in hot wallets. They can't trade easily out of their cold storage devices. While because we rebalance at a specific schedule, we know exactly when we need to take the coins out, and we know exactly when the coins will go back in. So we maintain our coins in cold storage 99.9% of the time. The only times they come out of cold storage, the private keys, are when we need to execute a trade to rebalance the portfolio, and then they immediately come off the exchanges and go back into cold storage. So the operational burden of going in and out of cold storage is mitigated by the fact that we're a passive fund, and it's a direct advantage over active managers that keep anywhere from 40 to 80% of their coins on hot wallets and on exchanges at any given moment in time.
That's interesting. It's very interesting. Now, my other question is that in terms of capital inception, there is today a lot of people, for example, that would like to participate in hedge funds using participation in cryptocurrency. So basically, guys that hold significant amount of positions in some cryptocurrencies because they were involved in the beginning and they mined a lot, and today they're left with 150 million. I know probably just myself, I probably know about 20 of those guys that have one cryptocurrency that is worth today 150 million, $200 million. Would you take participations in terms of cryptos?
And we already do. No, we would take both, and our fund is structured and our legal docs are structured to accept both cryptocurrencies and dollars, and we've done both. And it's a really good way, like you said. We know people who have significant positions in one or two cryptocurrencies that have performed really well. We say, give us a small portion of that and let us diversify it for you. You can maintain doing what you're already doing, but maybe you're not interested in opening accounts across 10 different exchanges, sourcing execution, liquidity, rebalancing your portfolio. Maybe you'd be happy to pay someone a small fee to do all that for you. And we've had plenty of success in that realm from investors, exactly like you said, who have made some money in crypto, but don't want to have to deal with it anymore and want to give us a small portion of it.
Yeah, they want to get, absolutely. So, people that would like to contact you, that are interested, etc., where can they find you?
CrescentCrypto.com. We have all of our information right on the website.
Perfect.
Questionnaire, and someone from the team will reach out to them right away.
Perfect. You have offices where? In New York?
In New York, yep.
Perfect. Any events that you'll be participating in soon?
Yeah, we a few events. We're the first fund to partner with Interactive Brokers. We'll be doing a panel for their network of over 5,000 brokers and clients on January 25th. We're also going to be involved in I'll skip the smaller ones. One of the largest ones we're dealing with is the BNP Paribas Annual Hedge Fund Summit. We are the first crypto
Mhm.
fund to be invited to present at their annual summit, and we're excited about that.
Okay, perfect. Well, thank you very much, Ali, for your time. I
My
wish you
pleasure.
best of luck and best of success. And
Thank you for having us.
I hope we can circle back very soon and find asset under management, few $1 billion. Huh?
All right.
Let's shoot for that.
Your words to God's ear, man. I really hope so. We're growing quickly, and we hope to find success and make money for all of our investors.
Absolutely. Wish you all the best. Thank you very much for your time.
Pleasure speaking with you, man. Have a good one.